opportunity for everyone to share about asking, answering your questions, but I think this is very, very important for all of you. So there are really 4 forms. There's the mobile home policy, the dwelling policy. There's in our state, which is unlike any other state in the country, there are 2 major homeowner forms. It's the HO3 and the HE7, other than the dwelling policy. And I want to kind of let you know why I'm concerned about what's happening out here. A dwelling policy is a named peril policy. So what it means by that is if you have a named peril policy or a dwelling policy, you're only going to get coverage on what the policy says is named. It's not a comprehensive policy. So I would really discourage you for having a dwelling policy. It might be cheaper, but this is some of the issues that I am seeing in the Eastern North Carolina. So ask your agent for the best form for the risk. We'll talk a little bit more about that. I would rather see you have a higher deductible than I would see you go on a dwelling fire policy or dwelling policy. The 2 major forms of policies that I like are HO3 and an HE7. And the reason for that is because it has replacement cost on it. And I don't know, I'm trying to do this really quick, and I wish I had a lot of time if you guys really wanted to know more about what that means. But I'll kind of give you a real quick idea. So if I have a house, and this is going to be like really cheap, but imagine that you're, just pretend, okay? So a $100,000 house. Let's say you have a $100,000 house for easy math. And if your house were completely messed up, burned down, that kind of thing, and it needed to be replaced, if it cost $150,000 to replace that house, if you don't have replacement cost on it, you're going to get a depreciated amount. So this is why I want you to have at least an HO3 and ask for replacement cost, okay? So the other thing about an HO3, it covers for a little bit of mold, $5,000, which is not much, and that's some of the issues that you all have, and I wanted to talk. I'll answer more questions, we can talk about that, but I just wanted to go through and give you the main things. Golf carts, the reason I put this here is that you can get golf cart coverage under your homeowners only if you use the golf cart for the house premises, like to pick up sticks. Okay? Or something like that, as long as you use it for the upkeep of the house. But there's a downside to that, okay? There's a big downside to that. You only get coverage for physical damage to the golf cart if you use it for the house. But if you cover it there, you're not going to have coverage for liability. What liability means, am I boring you all? No. Liability means if you were to take your cart, the first time I ever drove a golf cart, you guys can laugh, but today was the first time I ever drove a golf cart. So if I ran into John and I hurt John, which I could have done this morning because I never drove a golf cart, that's liability. That's where you cover under liability. So that's what I'm liable for. If I did not have that on a golf cart on a separate policy and it were only under my homeowner's policy because I claim that I used it for upkeep around the house, there would not be any liability coverage. So that is the downfall of having golf carts covered under your homeowner's policy. It also would not include flood, because we all know at the top, homeowners does not cover flood. So also, I want to talk about this real quickly. I've been very concerned, and I'm going to do more research, and thanks to Bald Head Island, because I promise you one thing about your Chief Deputy Commissioner, you can ask Marsha or Angela, I'm a researcher. And when I found out that they were having such issues with wind-driven rain, I'm calling the industry, we're going to come in, we're going to sit down, and we're going to talk about it. Under the dwelling policy, there is no coverage for wind-driven rain. So if you have a dwelling policy, there's no coverage for it. And that's where a lot of the issues are coming up. No coverage for wind-driven rain on the HO3 policy. There's no coverage for personal property on the wind-driven rain. So, let me give you an example. On the HO3 policy, there is coverage for the wind-driven rain if it hurts the dwelling or the floors. So if wind were to come in and come through the windows underneath the house and it hurt the floor on an HO3, I just had legal counsel that's going to write something up for me on Tuesday because I've been getting a different interpretation on this because we have different inconsistencies. I'm going to find out, and that's what I'm researching right now, okay? But I do know positively there's no coverage for wind-driven rain if it's got water on your pictures or your personal property. You have a couch and you have water coming in on the HO3 policy and it messes up the furniture, there's no coverage on the form. I'm almost done. But these are things that they really need to go away with, and if you don't put it up here on something like this, if you only retain 10% of what you hear. But if I put it up here and I explain it to you, you'll have a better chance of remembering it. And this is important because this is your assets, these are your investments, and I want to make sure you have the knowledge that you need to. So, let's talk just real quickly about named storm regulations. There are 2 deductibles often for the eastern part of the state. A deductible is the portion of money that you have to pay before the insurance company pays. It's your portion. So the named storm deductible just really changes the amount of the overall deductible. So it does not affect the other coverages. So let me give you an example. When you get a chance, I want you to check your policies and see you'll have 2 deductibles. One for your regular, if your house were to burn down, that would be your regular deductible. But once they name it as a storm, then you'll have a named storm deductible. And it'll look like this. $100,000 for the dwelling, $1,000 deductible is for like if your house were to burn down, right? But if it's a named storm, let's say the deductible is 2%, it's going to be 2% of coverage A. So if your house is insured for $100,000, it's going to be 2% of this, which is $2,000. If you just heard me up there answering these questions, you're not going to remember it as well as me showing. I've been a professor and teacher for years. That's why I ended up in insurance. I couldn't make any money just like him teaching. So I went into insurance, and I know enough to understand if I just answer these questions. Isn't this helpful to see it like this? So, and I also got a board here that if you ever, at the end, if you want me to show you how we do things like this, I'll be glad to demonstrate. Also, seeing pictures helps you. Loss of use. Additional living expenses. This is textbook. I mean, this is form, and this all comes out of chapter, this is your form, but chapter 58, which we have here, is the insurance laws. But loss of use is another big issue. If a loss is covered under Section 1, makes that part of the resident premises where you reside not fit to live in, we cover any necessary increase in living expenses incurred by you so that your household can maintain its normal standard of living. The issue is, with an evacuation, it doesn't necessarily mean that the insurance company has to pay you for loss of use. It's not me. I'm not the interpreter of that, so I'm only the public servant that's reading the law here, right? Or reading the form here. But having said that, so it's when something has happened, when you have a covered loss, that's when loss of use happens. So when you, I'll answer these questions, I just want to fly through this though. Refrigeration coverage. You have to have it by an endorsement. Make for sure your agent gives you an endorsement on refrigeration coverage under the HO3. And it's usually the limit, the max is $500. I'm going to tell you a little secret that's known to everybody now on the web live, but you want not to just turn in a claim, though, for refrigeration. If that's the only damage you have, I wouldn't turn that claim in, because your insurance companies rate you somewhat based on, they don't rate you, but they look at how many claims you have. And if you turn in every little claim, I wouldn't do that. So, okay, I'm going to fly through this because I don't want to take up her time to ask questions. But I wanted to make sure you also understand these defining lines on flood water and losses. So what qualifies as a flood? Before we go there, I want to say that we are state regulators. The National Flood Insurance Program is the feds. But I still wanted to give you the definitions and just share a little bit from the PowerPoint. A flood is a general and temporary condition where 2 or more acres of normally dry land or 2 or more properties are inundated by water or mud flow. Folks up in the mountains think that they don't need flood for the most part, but they do, because flood insurance covers mud flow. You all need at least 3 policies. You need a wind policy, and you need a flood policy, and you need a standard homeowner policy. And I wish I had so much time to put all of this on the board to explain why and how and why and so forth, but I am limited in time. What is not a flood? Erosion from regular tides and currents, sewer backup. Something else you need is make for sure your agent has given you an endorsement on backup, sewage backup. My sister, she's a shrink, and her office just got flooded with sewage backup from the city in Indiana. And I'm like, sis, did you have sewage backup drainage? So now she's texting me all of her policy, so I have fun reviewing that. But burst pipes or other running water inside a structure, rain that enters a structure due to damage to the structure's roofs or wall, wind-driven rain, and sinkholes are not considered flood. What is wind-driven rain? So rain that penetrates a building and that has not sustained damage, rain that seeps in around the windows. And so what I want you to do is I want you to make for sure that you look at your policy. If you have a dwelling policy, you do not have coverage for wind-driven rain. You have to have at least an HO3. So, have I bored you all? So, do you want me just to go through a few more of the questions and I'm done, or this? Or
do whatever you like.
Okay. Water damage from windstorm. So, damage from rain that enters the home through an opening caused by damage from a windstorm is covered under your wind and hail or homeowner's policy, not your flood policy. So if you could think of it like this, am I messing you up?
No, you're right.
So I want you to have a flood policy. I want you to have an HO3 if you can get it, and then I also want you to have a wind and hail policy. And I want you to have sewage backup endorsement. I want to make sure you have replacement cost. And I also want to make for sure that, let's see, what about golf carts? Oh, thank you. So let's talk about golf carts. I must admit to you all, I'm going to show my ignorance here. I was like, I have never in all my 25 years when I'm been asked to talk about golf carts. I was like, what? Isn't there a hurricane? Why do they want to know about it? No, I totally get it. So, golf carts. And I got an F in handwriting, so forgive me. But anyway, I tell you what, since golf carts are as important as sleds, we'll just scoot that right on over. I'm just teasing you all. Where you should put golf carts is on your auto policy. You want an auto policy. And you want to make for sure you have comprehensive and collision. You want to make sure you have both. Comprehensive covers if someone steals it, and I hear around here in Bald Island, people accidentally take off with the wrong golf cart, right? So if someone actually does steal it, you want to have comprehensive. Collision, that's if I run into John and I cream his and I hurt mine. Collision follows under that for my cart. So you want to make sure you have it that way. Golf carts should not be expensive to insure. So you definitely want to put it on your auto policy. So that should answer that. But on your HO3, these are the main things that you want to have as replacement costs. And so the National Flood Insurance Program, since we have FEMA here, I'm going to let him answer all this. But the main thing I want to let you know is that North Carolina Commissioner does not override the National Flood Insurance Program. Sadly enough, during Hurricane Florence, we have about 10.2 million people in North Carolina, only 134,000 flood insurance policies. It's tragic. It's very upsetting to me. My concern too is that mobile home policies do include flood, but It's the only policy that does include flood is a mobile home policy, which I haven't seen any of those on your island, so it's not applicable to you. But we are working at the department to see what we can do as the Department of Insurance to help with the flood issues. We've got flood initiatives that we're working on, so we're going to hire experts to come out and speak in Wilmington, the Piedmont, and in the mountains to educate folks on flood, like your realtors, your mortgage brokers, and all of that. That's the one thing we're going to do. We're going to have education for consumers on it. And the third thing we're trying to do is talk with the Rate Bureau to see how we can endorse policies better. We're trying to get companies into the state of North Carolina to sell flood insurance, private flood insurance. And that's a whole other topic for another day. But anyway, I just wanted to, I'm not going to go through all of that, but because he's here and he can answer all this, but I do have a lot about flood if you want to, and about the claims handling. I'm not going to do that, but the main thing I want to get to you now is these are the phone numbers that I do want you to have. And I'm going to give you my personal number at the Department of Insurance. I've never done that, but I want to help you. If you have an appeal to the North Carolina Joint Underwriting Association, there's their phone number. Appeal to the Department of Insurance, I'm going to give you my phone number, 919-807-6006. 919-807-6006. That's a direct line to my office. And the floodplain, and then the appeal to the North Carolina courts. The one thing also I want to share with you is there's a 3-year statute of limitations for turning in a claim. So that is how long you have to turn in a claim. It's 3 years. So, yes, sir.
Can you talk a little bit about the relative responsibility of the homeowner?
Excuse me. We're gonna take questions later, and we're gonna have you speak into the microphone. So just hold on to that. We'll get to that.
So I just wanted to share a little bit, and I would love to give you more information sometime about what you need. But anyway, that's an overview.
Thanks, Michelle. That was an amazing slideshow, and I hope that you'll share that with us. I hope you'll share that with us so we can put it on our website. That would be great. You all have sent in some questions, and I have to say Michelle covered the first 5 that were on my list, which were wind-driven rain, golf carts, and refrigerators. So let me go on to the next question.
Excuse me, may I add something about golf carts? When you put your golf cart on your auto policy, a lot of times they'll just, an agent or a company will extend the same deductibles that you already have on your automobiles. You want to be sure that if you want to change that deductible, perhaps lower it on a golf cart because it doesn't have the value, consider doing that. And also at the same time, you may end up paying a different rating location because the golf cart is located here, and if your permanent residence, say, is in Raleigh, your golf cart may not be rated for Raleigh territory, it would be rated for this territory. So I don't know whether that would mean an increase or a decrease in premium, but just know that the rated location might be different.
Does anybody else have anything before we move on to add to the wind-driven rain, the golf carts, or the refrigerator losses?
Yes, I can say this. There were 15,047 claims filed during Florence for flood insurance. We've paid out $593 million in claims to this point. I do not, my phone number is 919-807-6006. If you have any questions regarding flood, please call me. Actually, I will expand on what Michelle said. If you live in an area where it can rain, you should have flood insurance. As she said, we've got 10 million households in North Carolina and only have 134,000 flood policies. I see this all the time. You know, the average amount of money given out by FEMA in a disaster is $6,000. The average amount of claim on those 15,047 that was paid out during Florence was over $46,000. So which one would you prefer? 6,000, 46,000? Your decision. But if you live in an area where it can rain, you should have flood insurance.
I would also add to that you are protecting a pretty huge asset in your home. So as you go about wondering what kind of coverage you need, there are also you can also purchase an excess flood policy or an excess wind policy over and above whatever the basic limits are that you've got to consider when you are figuring out what you want to protect and how much you want to protect.
Yeah, and I would like to add to that. The $250,000 is the max on the National Flood Insurance Program on when you get your home insured, and if you end up doing the excesses, as he's just explained, there's two different markets. There's what they call, well, the excess surplus market is what we mainly have in North Carolina because privatization of flood, even though we've tried to get carriers to come in to the state, we have not had anyone to really want to come in and write flood private. So when you hear folks saying, you know, privatization of the market and flood insurance, it sounds good, just like crossing state lines with healthcare. It all sounds good, but when you start looking at it, the thing is we have to do is we have to make sure that we always provide a healthy insurance marketplace for you. If the insurance companies are not profitable, then you're in a real bad situation, right? So excess surplus lines is the really only alternative to that. And what I'm trying to explain is there is a way to insure it above $250,000, even though we don't have privatization of flood insurance. That's what I'm trying to share. I went around my elbow to explain that because it's kind of complicated, and I'm really wanting to be on the board up there to write. But anyway, I think you got it.
Okay, Michelle mentioned loss of use as one of the things, and all of us actually in this room had to be evacuated because of the hurricane. Are there options for coverage for expenses for hotels and mileage and that sort of thing if you have to be evacuated?
Let me answer that. So as I was stating, in order for it to really be covered, you have to have, and I hate telling you this, but it is what it is, that you have to have damage to your home, is what it is if you have damage to your home. When the governor says you have to leave the properties, it doesn't necessarily mean that you're going to have coverage to live elsewhere. So loss of use is designed to help you when the house is not livable, not just when you evacuate. And I hate to say that because people will get mad at me, but I just want you to know that is one of the risk factors that you have, and I'm sorry.
One option that you might want to consider is when we live on a barrier island and we know that the incidence of these kind of storms might be enhanced, you might want to consider if it is affordable to set up a separate account, a bank account that really covers the deductible and could actually cover in advance some of the loss of use that you would have if there was a mandatory evacuation and you sustain no damage. So what you're really setting up for yourself over time is a savings account that's dedicated either to paying part of the deductible or loss of use or any expenses that you might incur with the mandatory deductible. That way you don't have to just be blindsided by that expense when it happens.
There are some aspects of insurance that kick in when we have a named storm, and several people asked if we could discuss that a little bit. So what are the differences that we need to be aware of when dealing with a named storm? And it seems like we seem to have more and more of those lately. Who determines when a storm is a named storm, and what are the criteria for that?
Well, the Department of Insurance does not determine the named storm. But as I stated to you earlier, what you want to do is you want to look at your policy, and you want to look at, especially since you're in the barrier islands or you're in the coastal area, you want to make sure your deductible on the named storm isn't real high. I mean, that does cause you, when it's higher, you get a cheaper premium, but as soon as it's a named storm, you're going to pay that higher deductible. That's the main thing. It's really not complicated. It's just what I showed you. When you have a named When you have a named storm out there, a named storm out in the coast, you know, like a Hurricane Florence, as soon as they name it, you know that your deductible is going to be the named storm deductible. It's really kind of simple. Does that answer that question for you?
Yeah, that's great, thank you. We had probably 5 or 6 people who wanted to know about named storms. Let's have a FEMA question here. What resources are available on a barrier island following a storm, and how soon, if you're going to file a FEMA claim, how soon should you do that?
As soon as the president makes a declaration is probably the best time to do it. If it's a flooding event, as Michelle put up there, 2 or more acres, 2 or more properties, one of which must be yours, you can file a flood claim. You know, it doesn't have to be a presidentially declared disaster to file a flood claim. We get storm surges, or we get surges out here, high tides sometimes, moon being just right, we could have a pretty high tide and have some flooding at that time. So it doesn't have to be a presidentially declared disaster for you to file a flood claim. Again, the quicker you file it, and I know that Dr. Osborne and Michelle and Joyce King went out and did the insurance camps this year. And they, you know, again, those types of things, putting boots on the ground and people out there as quickly as we possibly can, is what we're trying to do. Unfortunately, because you guys were evacuated off the island and you had limited access, it was very difficult to get out here in a timely fashion. But you still know there's a good possibility that you could have had damage on the 14th of September. So you can start the claim process. You come back and there's nothing wrong, perfect. That's even better. But if you start the process, as soon as somebody can get out here, an adjuster can get out here, they're going to take a look at your property. And again, you keep your fingers crossed when you've been evacuated that hopefully there's no damage. But if there is, you're ahead of the process.
One thing I'd like to mention is there's a waiting period when you get flood coverage. So don't wait till 10 days out, because it's not going to cover that named storm. And also, in my previous life, I was an underwriter, and there's a cone that's the longitude and latitude. When there's a named storm, you are not allowed to get coverage for certain items, you know, even comprehensive and collision deductibles cannot be changed or added when there's that named storm and it enters that certain longitude and latitude. So be sure that, you know, when hurricane season comes upon us, that you have the proper coverage prior to the chance that there's going to be a storm. So I just wanted to mention that as well.
So don't wait too long.
Yes.
There is a huge gap between the cost to build and repair on Bald Head Island and the rest of Brunswick County, even though we have the same zip code. So how can we get ahead of the frustration that property owners have experienced in dealing with adjusters who aren't aware of the special issues and the high building costs that we have here on the island? Is there a way we could break Bald Head Island out of the rest of Brunswick County and be our own little insurance pod?
So I'm going to let her answer the adjuster question, because she's our deputy over adjusters. But I do want to talk about the insurance pot. Like, you're talking about reinsuring yourself.
What I'm talking about is if you're going to replace a roof, say on Bald Head Island, it's going to cost you twice as much as it would cost to repair it across the river in Brunswick County. Right. Yet we're all in the same zip code. Right. So when adjusters come, they tend to look at the rest of the zip code, and that's how they will value the replacement cost here on the island, even though that's not realistic.
It's transportation costs.
So I do want to answer one thing on that. If someone is charging you as a public adjuster an exorbitant, or an adjuster is charging you an exorbitant amount to come across that ferry, or something like that, and you see that they're overcharging you, and it doesn't look like that's not the issue?
No.
Okay. So
it's the fair amount
It's just that it's that much more complicated to work out here than it is where you can drive to the side.
Okay.
It's the price list.
Okay, the issue is that because we're a barrier island, there are costs involved with transporting materials here, which add to the cost. And day workers and all of those costs that have to do with getting people from the mainland, getting people and supplies from the mainland to the island.
We're going to defer that to Angela. She is the deputy over the adjusters, so I'm going to defer that.
So the policy contract and the adjusters, we can't tell, we can tell adjusters how to regulate under the statute, what the rules and regulations are. We can't tell an adjuster how to price their items and how to price their charges. That's up to the carrier. So the adjuster is working with the carrier. And so that's kind of a legal question. We're not attorneys, so what you would need to do is contact probably the carrier first, and then maybe go through the, you'd probably need to contact the carrier first. You could file a consumer complaint with the Department of Insurance, and we could look at that. But oftentimes it's going to be referred back to your attorney or your carrier, because that's a contractual matter between you and the carrier on the pricing of those particular items. We don't, that's not regulated in 5833. And so I don't know if there's some sort of endorsement that you know that you could get to endorse your policy for extra cost. I'm not aware of that.
So the bottom line is all of these are
Excuse me, sir. Please don't call out questions because the people online can't hear.
I'm clarifying the point. Is they use a database called Exactimum.
Mm-hmm.
In this database, they have certain dollar amounts that they use for repairing a roof, or doing certain amounts of labor. No, I'm not going to stand up, I can't. Okay. All right. So how do we get them to have a database that is for Bald Head Island, not a database that is for Southport and Brunswick County? That is really the bottom line of the question.
And I hear your question.
I might be able to help a little bit with that. But if you,
Go ahead.
go ahead, you first.
No, what I want to do, sir, is I want to go back and talk to legal counsel, and I'm hearing you, and you have a voice here, and I'm going to look into it. And here, Chapter 58, and this is what we, as your state regulator, we have to go by this book. And in this book, it does not give specification on the contractual amount of money for adjusters to pay your claims. But I'm hearing you, and I want to go back and do some research on that. So that's my answer for right now. So,
Bob, you were going to say something?
Yeah, it's an awkward but sometimes navigable process. I've experienced it myself on my own policy here, trying to get an evaluation on what replacement cost coverage is for my house. And my current company wanted to lower that by a significant amount, and we had a big discussion over building costs. In this case, it was resolved by having an endorsement that said that if there's not enough money here for a small amount more, I can pay to have a higher limit on my dwelling policy, which could help out in a case like that. I'm sorry.
No,
but in your particular case, an insurance company, most of the time, you're right, is going to use their database. It doesn't really include specific areas like a Bald Head Island, which we know has much larger costs. But the insurance company, at the same time, if they give you an estimate on what it costs, they are also obligated to provide somebody who can do the job for that much money. And if you can't find anybody, there are things called supplemental claims that you have to go through a process with an examiner, not an adjuster. The adjuster that they send out is simply someone who comes out here and assesses the damage. The person who actually settles the claim is a claims examiner somewhere sitting behind a desk in whatever major city they're located in. So it's an awkward process, but you have to go through that process. And I would say if that proves unsuccessful, your friend is in the insurance department. These are the folks who really represent us, and they'll handle a complaint, a justifiable complaint like that, and they'll do their best to try to resolve it. But it's really an unfortunate issue that has fallen out with this particular island, and you know, it's difficult to navigate, but it is possible. But I also recognize exactly what you're saying.
So I have a question, because I really want to help. So I guess my question is, are they saying that you don't have enough replacement cost on it? Or are they saying that so it's not the replacement cost? Because I do want to go back to that make for sure that your homes on an HO3, the max that's paid out on replacement cost is 125% of dwelling A. So make for sure dwelling A has enough coverage to replace your house, especially since the cost of rebuilding on Bald Head Island is more. That is very important. There's another form, which I didn't get into today, which is called an HE7. If you can get an HE7 policy, that's the best policy in North Carolina, and I highly recommend that. I'm not sure that you can get that on this island, but an HE7 is an unlimited amount of replacement cost, so there's no cap of 25% on that policy. You know, I'm not just going to say you don't have anywhere to go, as Bob said. If you have an issue with an adjuster or a claim or something that you feel is not fair, we are your advocates. So, you know, we can't always fix everything, and I'm not here to say that we're going to make it all right, but at least we can look into it. We have a team of attorneys, CPAs, actuarial department, we've got a fraud department, we're over the bail bondsman. I forgot to tell you all that we do, but we have a mediation, and I've got it up when you guys asked that question as what the mediation process is and what you can do to file a complaint, and we help consumers. That's what we're here to do.
Let's talk about public adjusters. Can you talk about what their role is? What are the pros and cons of hiring a public adjuster?
Okay, I'll take that one. A public adjuster is not the same as a company or self-employed adjuster. They're not the same. So if a public adjuster comes, if you haven't called in a claim and a public adjuster comes to your house and says, I'm the public adjuster, I'm here to help you on your claim, they're not from the company. And I've had a lot of complaints that people said, you know, before, when the hurricane was over, people came and said, this public adjuster came before I'd even called in a claim and said, I'm a public adjuster, I'm going to help you with your claim, sign this consent form. They signed the consent form, which was the public adjuster contract. They're now entitled to 10% of whatever your settlement amount is, whether you're happy with your settlement amount or you're not happy with your settlement amount. Under the public adjuster statute, which is 5833A, on a catastrophic storm, the maximum they can charge is 10%. But an adjuster works for the company. That they're either going to be called CAT adjusters. They'll have little CAT adjuster badges if it's a catastrophe storm, and we issue those. Or they're a self-employed adjuster, or they're a company adjuster. But they're all just adjusters for the company. A public adjuster is hired by the consumer to work on the consumer's behalf. However, you need to understand that they are going to get part of your settlement, whether you are happy with it or you're not happy with it. There should be a written contract, which is required under 5833A65, and but public adjusters are totally different. People hear public and adjuster, and they think, oh, they're just the ones that come out on a named storm, and they're helping the company to help the public. That's not the same thing, not at all. So if you have a question about a public adjuster, or you have complain about a public adjuster, I'm your huckleberry. So, you know, see me or call my office, and we can send you to the Consumer Services Division to handle your consumer complaint first, but then they will send it to me if there's misconduct. Oftentimes we found that public adjusters are working, you know, with construction companies, roofing companies, and things like that, and sometimes they're in business with each other. So you just need to be it's kind of a buyer beware. Not saying that they're bad, because they're working on your behalf, but just, you know, just beware.
With regard to the claim that you had inquired about, did you ask many companies have preferred repair facilities. They have preferred body shops if there is an auto claim, and in many cases they have preferred repair companies with whom they work, even for homeowner claims. If you haven't already done so, I might inquire with your insurance company who their preferred homeowner repair person would be, because if you bring them over and they say it costs, you pick a number, X $1,000 more than the claim, then that's also a very trustworthy component of how they're going to settle the claim as well, and they might come to your defense a little bit more. So I don't know whether you've asked them about that or not, but I would certainly inquire with the insurance company to see if they have their own preferred homeowner repair network.
I would like to also add to that, if you have fine arts and furs, like you're gonna have a fur here, but or antiques or anything of high value, I would get them what you call schedule them, and then you'll get the right amount. So you need to make sure you do that. On an HD7 policy, it has more coverage for those types of things, like there's $5,000 automatic for misplacement of your jewelry and rings and stuff like that. On the HO3, it's $1,500. And so there's a big difference between those coverages, and I'm sharing all that to say to you that you need to make for sure that you're asking your agent these questions, and you're making sure that your agent's giving you the best policy. Do not go for the cheapest. So that's really, really important.
If you receive a check for damages, can you cash it and then still continue to challenge the amount of damage and repair costs?
I would not cash a check if you're not happy with the settlement.
That was an easy one.
And if you have a public adjuster, sometimes they're going to ask, I'm sorry, if you have a public adjuster, if you've hired a public adjuster, then sometimes they're going to ask that the check be made payable to the public adjuster and to the claimant as well. So you're both, it's going to need to be signed by both of you, because the public adjuster, as I said, is working on your behalf for a first party claim. And I did not make clear that that is just for property damage only. They do not do health insurance, they don't do auto, they just do property. But since they're working on your behalf, they're going to want that check made payable probably to you and to them, because you're in a party contract together.
Read all the documents and be very wary of the words full and final payment or settlement.
From an NFIP standpoint, during the Florence, they gave out, we issued up to $20,000 in advance payments. So you are safe to cash that check, and if there was a supplemental claim, all you had to do was file for it. So they will, in most cases like that, they do anywhere from $5,000 to $20,000 in advance payments.
I've got one more question, and then we're going to open it up to questions from the audience. And that is, what do you see for coastal homeowners in the future? Do you think there's going to be a time when it will not be possible for those of us on a barrier island to get home insurance?
You know, that is the question that I want to answer. So one of the most important things that we can do for you at the state is to, like I said earlier, probably our primary number one focus, other than protecting the consumer, is, and that's one of the ways to protect them, is to make sure that the industry is healthy. That's what I was saying to you, and I don't mean like making tons of money. I'm talking about what happens is we have an actuarial department, and what we do all day long is look at the loss ratios and statistical analysis as to whether or not an insurance company is making too much money, not enough money, blah, 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 in reference to the rate filings, and whether they should get a rate increase or not get a rate increase. And this is probably one of my favorite areas because I taught statistics and quantitative studies and finance and investments. And why I say that is that it is our job at the Department of Insurance to make for sure that we keep companies here to protect you. And what is always very important is to have what you call a residual market. Does anyone in the audience know what a residual market is? Okay, I want to get to my whiteboard. But what a residual market is a market of last resort. So if in a standard market, in the standard market of insurance, if no one wants to cover you, we as a state need to make sure that there's a place to go for the last resort, which is the North Carolina Coastal Insurance Association, which most of you have probably your wind and hail through. It is very healthy. Gina Swiss-Gable, who is the manager there, has done amazing work. In earlier years, there was a concern in 2010 about the state of North Carolina with regards to carriers wanting to pull out of here due to hurricanes. The good news to tell you is that we're very healthy right now. We've done very well. And the North Carolina Coastal Insurance Group Association, it used to be called the Beach Plan, now it's the Coastal Plan. I keep wanting to call it the Beach Plan. One of the things that we always look at is reinsurance cost. So when the reinsurance cost went up, the Gina Swiss-Gable, I give her great credit for this, she was able to bring competition to our state and bring the reinsurance cost down by having cat bonds, catastrophic bonds. So catastrophic bonds actually allowed for there to be a competitor in the reinsurance market. So that helped stabilize our market. I'm giving you a long answer for this, but this is very, very important for you all to understand that when there are rate increases, I know it's frustrating, and I hate to see rate increases on homeowners. And that's what I'm heavily involved in at the department. But I want to tell you with great confidence that if there's ever a rate increase, it is not for anything except, if the Department of Insurance allows for there to be a rate increase, it is not for anything except to make for sure that the market is stable. You want to make for sure the market is stable. And I can't stress that enough, right? The good thing is there's a cap of 25% that could ever be raised at one time. But I will also tell you, as the Commissioner Causey, that we are very careful in wanting to make for sure that the whole state of North Carolina gets more fair across the board instead of one part of the state getting a huge rate increase. But again, understand that we are here as regulators to make sure that you have a place to be able to purchase homeowners. And the residual market of the North Carolina Coastal Insurance Program is doing very well, and it's a great residual market for us. So I will say to you that we're in a very good place, and I do not think that you will ever lose your homeowners market as long as you've got someone at the helm watching and making sure that the market is healthy and stable, not making too much money, but making enough to make a profit. Does that help answer that question?
That's perfect, thank you.
Perfect. That's one of my hot pet peeves.
All right, let's hear from some audience questions, and if you would just come to the microphone, please. All right, the microphone will come to you.
Okay, it's not rocket science, but it's close.
Right into it, you gotta be literally 1 inch away.
This isn't rocket science, but it feels pretty damn close. And I'm wondering where the line is between my responsibility as someone who doesn't know much about all this stuff and the insurance adjuster's responsibility in terms of informing me, and is there such a thing as insurance malpractice? Yeah, the agent.
So the agent does have an errors and omissions policy. So like medical malpractice, I think that was your question. I had a hard time hearing you. But agents do have an errors and omission policy, or should have an errors and omission policy. So, and I think the second question is what's your responsibility and what is their responsibility? Well, that's a very tough question. I would say it's twofold. I think the agent does hold responsibility in making for sure that they do their due diligence and sharing with you and educating you. But I also think that the consumer has a responsibility in also being educated and making sure that you know what you're doing. When I was an agent, I made for sure that I went through and explained, you don't have flood insurance, you have this and that, and I would make folks sign off. But I do think that if you don't feel that you're getting the information that you need from your agent, if today you've learned these things and no one's sharing with you, I would look around and get the right agent, because your agent is your expert and should be your expert in this.
Well, I want to follow up on that. So thank you for that earlier presentation. I learned a lot, and a lot of what I learned was the stuff I didn't know, I wasn't smart enough to ask. And I have the same question, you know, what obligation does the agent have? And if the agent hasn't informed the insured, is there a recourse can the insurer go after the agent's error of omission policy to get recourse? Is that a possibility?
I believe that would be that's a legal question. One of the responsibilities that you have as a consumer is we all get those policies and we don't read, you know, I mean, I'm as guilty as the next person, and I'm in insurance. But make sure that when you take out a policy, you read the policy and you understand it. If you don't understand the things that are listed in your policy, then you need to call your agent back. Call them before something occurs, not after something occurs. And sometimes that's hard to do because you're not really sure of the language.
You know, thank you for that. But you know, if I have a DP policy, how do I know the HO3 even exists unless someone tells me? How would I know that?
So there are some areas that so if you have this is really complicated. If you have a rental policy, if you rent your home, there are some times or some companies that will not write it on a homeowner policy, an HO3 policy. So you can do it on a commercial policy, you can do it on a landlord policy. I'm not an attorney, and as Angela says, I'm not going to sit here and tell you what your recourse is with an agent, because that would, that's up to the court system. But I would say this, today you've learned, I can't help what happened in the past, but I have learned in this position, we've got to get out and we've got to educate consumers more. And that is what my job is. And that's why on a Saturday or an evening or whatever, I don't mind going across the state, doing town halls, getting our folks out, having a regional director out here with you all. We've got to do a better job in North Carolina in educating you all, because this is the backbone of the economy. Your homes are your greatest investment. And if we don't do a better job in explaining how to protect them, we're in trouble. So that's why we're here today. And I'm sorry I'm not giving you the answer that you want, but look for an agent that will share and explain.
The unfortunate short answer to your question is no. There is no other alternative than hoping that you either find a good agent, or we as consumers have to be more educated. I've been in this business for 45 years, and that question started out 45 years ago, and it still remains. With the internet, I can tell you that at this point in time, there's a lot more research, and it's a lot easier to gain information where you or me as a consumer can then go to an agent and ask better and more germane questions than we ever could in the past. Unfortunately now the horse is out of the barn, and I think everybody sitting here probably has all the questions now that they want to go back and ask their agent that perhaps they did not know that they should have asked prior to the hurricane coming. And plus you do have recourse if you have an attorney that you know who would be a consultant on this. The errors in emissions policy is the perfect place to go. And that's an agent, when you start to say errors in emissions to an agent, it curls the hair on the back of their heads. But it's a legitimate complaint and a legitimate issue that you should probably take up with an agent if you feel like that's been a problem.
So I also want to say this shows you how important an agent is, right? If you have a good agent, it shows how important that agent is. And second thing I'd like to say is that at the department, one thing we have learned from this too is we're going to change the way continuing education is done in our state, making sure that the agents know the opportunities that they can improve on as agents. So we're also doing that as well. So.
Yeah, I have a question about just, I was told that there's certain deadlines that may or may not apply to your claim, and to find out specifically, you have to read your claim, but the one I'm concerned about is it says that 180 days from the date of the event, you're supposed to have certain things done, and if not, you could lose your claim for that. Are there any deadlines that we should be aware of that may or may not be written in our policy?
So you have 3 years by statute to report a claim, and I have on the back of this slide, if we go to my PowerPoint at the back, there's a mediation plan that will show you for mediation, but for a claim, you need to make sure that you protect as soon as you can get back to the island. What I would do first of all is call your adjuster or call the company and make for sure that you notify them of the claim, and make for sure that you do everything in your powers to like put a tarp over an area if you can. I'm not asking you to climb up on 3 levels or whatever, but I'm saying anything that you can do to protect your property is what I would say for you to do. Those are the 2 most important things, and so those are the 2 main things I'd like to say. And then there's the disaster mediation plan. I'll try to get this PowerPoint out to you, and this shows you what you can do in the event of a disaster mediation.
And we'll put that on our website.
Sure.
Any other questions? Wait for the microphone.
My question is more on, the claims are what it is, I think. It's kind of past tense. But looking forward on rates and how the policy, wind and hail is the important one as far as the cost. And how that is calculated. My problem has been, and it still is, and it's kind of a catch-22 on the question of determining the cost based on Brunswick County at large rather than here. If you getting the valuation for the property when the policy value is set for a high value, what they call high value home, they come out and inspect it, and I assure you that they base the value on replacement cost here. And so it's a catch-22 when they kind of try to ignore that if you have to replace a roof, and so that's just a.
So that's why I shared with the gentleman that when an agent values your house, they use an experience mod, and they use a replacement cost and a location multiplier for that area. And that is why I'm going to do research, because I got to find out if your experience is the reason I didn't go into all this, but I promise you I will look into it, that there's a location multiplier that determines the rate for replacement for that particular house. What I want to go back is find out that factor and find out if they're rating the location factor at the rate for Bald Head Island. Having said that, this is the other side of it though, and this is great dialogue. If the carriers base it on replacement costs, if they say that they're going to have to charge more, that location multiplier will go up. So your insurance rates will go up. You see what I'm saying? Oh. So if there, what I'm saying is there is a what do you call it? Just a second, I can get it out. Formula. Sorry, that took so long. There's a formula to determine the replacement cost. In the formula, there's a location multiplier. I have got to go back and find out whether or not the location multiplier is being used as the same amount for this island as it is for the island as Wilmington. And you all wouldn't know that because you don't have that formula. And I got to go find out if they're not, and if they're using the same location multiplier as Wilmington, then it's what it's not doing is not evaluating the amount for repairs for you here. But if they're not using the one different for Bald Head Island, then it will cause an inflation in the cost of your insurance because that location multiplier will go up. So there's always a catch 2020. So I'm just have to look it up, and I'm going to get back with you. Okay? I've learned a lot here today.
My real question has to do, looking forward, to try to get the most reasonable wind and hail premium you can. I've tried to. They up the cost two different ways in my experience. One is they try to enforce an annual appreciation, and you have to fight that every time. And then that's a double hit because there's also a requirement for a percentage for the value of the home for the insured value for contents. And if you got a high value house, what they call, say, $1 million house, and if it's 50 to 70% for that for also, you're going to pay the premium on contents. You get a double hit for just on the basic premium, but also every time they raise it annually, the wind and hail cost becomes just prohibitive.
So I know exactly what you're talking about, and I understand your concerns on that. So what he's speaking of, there's what they call an inflation guard. So an inflation guard, what happens? Okay. Thank you. So what happens on an inflation guard, it's just too short anyway, so there we go. What happens on an inflation guard is, must be me. Okay, so it has a cost of inflation. So if your house is insured at $100,000, then the cost of building that house the next year would probably be $103,000 or $102,000, depending on inflation, right? I think inflation's about 2% over the course of 20 years or something like that. I don't know, I mean, each year. So it's usually about 2%. So you're exactly correct that there's an inflation guard. So every year you will see your dwelling coverage A go up about 2%, 3%. And then what follows suit to that are contents, and you're exactly correct. Whether it's a dwelling policy or an HO3 policy, it'll be 50% for a dwelling policy and 70 or 80% for an HO3 policy. But it's not really costing that much for contents coverage. That if you look at the relativity factors in the ratios on the formula of homeowners, the contents coverage is not really the biggest driver for price. So you do want to make for sure that you're not overinsured on your dwelling A when you take out your policy, but you also got to make sure that you remember that you want to make sure that if your house has to be rebuilt, that it's not, that you got at least 120, you take the ratio of 125%, it's 100,000, and it costs 150,000 for you to rebuild your house, and you've only got 100,000 on there, you're only going to have 125,000. I can show this on the board and it'll all make sense.
What, Dick, maybe it would be a good idea if you did show us on the board do you mind doing that? Okay, and then we'll move on to another question.
I'll give you all an exam at the end. Trying to be funny.
Well, it's not erasing very well. So if you had a house,
Thank you. If you have a house, and let's say it's $100,000, I'm just making simple math. I guess I should do it here, $1 million, right? Here we go. So it's $1 million home, and it all burns down, or the wind, it's a covered pearl. And an HO3 policy, the amount of replacement is 125%. 125% is the max on replacement costs. So if this house were to burn to the ground, or covered pearl, or had a windstorm or whatever, was going to cost 1.5 million to repair, you're only going to get 1.250. So you're going to have a deficit of 250,000. So the reason that inflation guard is put there is to make for sure that as the inflation to rebuild your house goes up, you've got protection for that. Is that helpful to you? Am I too much in the weeds? Okay. So I know it costs more, and I hate that for you all, because at the same time, you've got the inflation causing the cost of it to rebuild the house, more expensive. But if you don't have it, then your house to replace it's going to, you may not have enough money. Now, if your agent has it insured for $3 million, and you know that house would never cost more than $1.5 million, you need to talk to your agent about reevaluating the cost estimator on that home. But I just want to make sure you understand that you're only going to get 125%.
Thanks, Michelle. Maybe just one or two more questions. Chris, go ahead.
I actually have an observation and a question, and it's two parts. When I work with real estate clients and they're trying to get coverage on their home, the agent will go to the tax records and see what the current assessment is for that property. So a 2,000, and I think this goes back, I'm kind of repeating, but a 2,000, and I don't know anything about the formulas, but a 2,000 square foot house here, a minimum of $350 to $400 a square foot to build versus probably $150 to $200 on the mainland. And that's a two-part. We have very, very strict building codes here. So it's far more expensive to build over here, in addition with the transportation costs, but our very strict building codes. The adjuster or the agent will also go to the appraisal. Now, we call it somebody without geographic knowledge. So sometimes a bank will send an appraiser from Raleigh to come and do an appraisal here, and when you're in the middle of a closing, they have no geographic knowledge of the value of the buildings here. So the point is that our premiums are based on this higher value, yet when an adjuster comes to evaluate your repairs, they are using square footage rates on the mainland. That's what I have observed. By the way, I've actually come out of this okay. I had significant damage to my home. The second thing is there's a basic disconnect between how an adjuster estimates the repairs versus how a contractor will estimate the repairs. The adjuster comes in and does it room by room, and they'll give you 15 or 20 pages, bathroom, drywall, insulation, paint. And the contractor comes in and says, okay, all the drywall costs this. Well, when that information gets to the desk adjuster within the insurance company, they're comparing apples to oranges. So my personal solution to that was to make a spreadsheet based on the adjuster's square footage and linear feet and all of that, and go to my contractor and say, okay, here we're going to go room by room, you plug in the square footage numbers. And I have to say, when that went to the second adjuster, it flew through the insurance company and there were no problems. Because the desk adjuster sitting in Phoenix, Arizona, didn't have to do any work. So it took hours and hours of my personal time to get it into a language that the desk adjuster could understand. So there's sort of a disconnect there that a lot of the contractors on the island are not willing to take the time to create an estimate in that language that the adjuster is using.
Do you have a question, Chris?
Well, it was just observations for everybody, but are you finding that to be, as far as in the insurance industry, I think it's a big problem, and I think people can't take the time, nor do they have the understanding in construction to figure out how to do it.
You just succinctly described the absolute problem and the solution to doing that, and it takes work on the part of us as a consumer to push what you've just done. I don't know whether there are any regulatory things that the insurance department could ever do about that, but you have, in a nutshell, explained the problem, and that's exactly it.
And oftentimes that's why individuals hire public adjusters because a public adjuster is working in relation to a first party claim. So they are working as your eyes and ears on that. And as I said, a lot of times they work closely with contractors, or they come from that type of background. So a lot of times public adjusters, they are working, doing that type of work if you don't have the knowledge or the inclination to do all that. And that may be their specific role. And that's why they're getting paid to do that.
Okay, I'm sorry, didn't mean to interrupt.
That's fine.
Okay, thank you. Susan, I think you have a question, and we're going to wrap it up.
Yes, I do.
Soon.
Mine's about timing. Is there anywhere a timeline that even estimates when a claim will be settled? We came here shortly after the hurricane. Our house was severely damaged. We were told we couldn't live in it. It's almost repaired now, but it's all been out of pocket. I mean, and we've got plenty of insurance. But, you know, they'll send a check, well, maybe they'll send a check, or maybe we need one more document. We've got documents this thick but sometimes it's just, we need one specific document, so you get that. And then next week they need another document, and they're gonna send you some money, but it's only a third of your claim. It's just, I don't know how regular, normal people navigate the system. It has been a total nightmare. So I am just wondering, in 5 months, should I be expecting this to have all been settled? And if so, what should we do?
I'm not aware of a specific timeline, but I will say if you are experiencing difficulty in having claims settled, and I've helped some individuals, my division doesn't specifically do that, but I've helped them through the Consumer Services Division. And when a complaint comes into the Consumer Services Division from you, they send a letter to the company to investigate that complaint. The company, by administrative rule, is to reply to the Department of Insurance within 7 days. And I can't speak to any particular situation here. In one case, it may just be that it makes somebody else pick up that file and take a look at it. So I would suggest that if you're experiencing that kind of difficulty and that type of frustration, that you may want to file a complaint and just let the department contact the company, and then we can work on your behalf there.
Also, looking forward, the insurance department of every state keeps incredible records on complaint ratios of every company. And if you've experienced that kind of a problem with this particular company, while you need to resolve that on one path, you should also be looking forward to saying, what's the next insurance company I'm going to work with? And that resource at the insurance department is a great place to start.
So I will tell you that Commissioner Causey, and this is main goal is to be more friendly department and to be communicating more to consumers. And I promise you that if you contact the Department of Insurance, it will be looked at. And as Bob just well said, we keep a tabulation of every single phone call that comes into our department. And we look to see if there's a trend of an insurance company not paying claims or being delayed. And we work there to protect and to help you. So that is the main thing I want to say today, is that if you've not reached out to us and you're having difficulty, that is what we are there for. Tax dollars are being paid. We're public servants, and we're here to do everything we can to help you.
Moving back to the federal level here, I was just wondering, Jerry, as the FEMA representative or one of them in the area, what are the one or two questions that people ask you most often, and what are the answers?
Well, one of the questions that I was asked the other day is, how long do I have to file my proof of loss for this particular event? And that is 365 days from the actual date of loss. So you have up to a year to file that loss. There is an appeal advocate or an insurance, NFIP advocate, insurance advocate in DC. If you feel like you're being unfairly treated, just like on the state level, we have a federal insurance advocate that is going to fight in your behalf. The biggest question is, why didn't my agent tell me that I should have content coverage for my flood policy? That's usually the one that they come out with. The other one is, well, I could have gotten $250,000 on the structure, but my agent only covered up to the amount of the mortgage. So, you know, again, as Michelle and everyone has said, it's our responsibility to know what we can get. And it's up to us to go out and as a former agent, one of the things that I tried not to do is I tried not to go in and be ashamed of what my asking price was for a product. You know, I'm going to tell you the facts. I'm going to tell you this is what you're going to get if you purchase this. If you don't purchase this, then it's going to cost you less, but I suggest that you get this. So if you go out there and you don't have an agent, if you have an agent that is just trying to take an order, so to speak, and not trying to ask you the questions that need to be asked, then you've got an order taker for an agent and not a very good insurance advocate, in my opinion. And having worked in the insurance business and in the insurance industry, I always wanted to be an advocate for my clientele. And you'll know when you've got a good one. You'll also know when you've got a bad one, and usually the bad ones come after you've had an issue. So,
is there a rating system for agents?
The question is there a rating system for agents?
You know, there is and there is not. Most agents, some of the agents now have Facebook accounts or other type of accounts where you can go in there and give them a 5-star or whatever. You know, just like you do a restaurant. You know, I mean, what kind of service does this agent provide? If you have, again, these folks from Raleigh are the ones, they're your biggest advocate as far as finding somebody locally. I know that for flood insurance, we have we used to have, we still have, it's called floodsmart.gov. And if you had your zip code, put your zip code into the floodsmart.gov, it would list the agents that were registered to do business on FloodSmart. Doesn't necessarily mean they're the only agents in the area that writes flood insurance. It did not give us an opportunity to rate those. FloodSmart was hacked a couple of years ago, so they took it down, redid it, redesigned it. And now, when you put in flood insurance for this zip code, it brings up every agent that in the state that sells flood insurance. Does not rate it. It does not do it that way. But you know, if there's not a way to go in there and give 5-star service, maybe that's something we should look into as well. But again, if you do that, you may tip the boat a little bit. It may not be a fair market. You know, word of mouth is usually the best way to find a good agent. If you're not sure, ask your neighbors, ask the people how satisfied are you? You know, that's something.
I'd be skeptical of using any likes on social media to determine whether or not the agent is good, because they have access to exactly the same likes and thumbs down as the rest of us do. But I would start with the Better Business Bureau. They may or may not have any local statistics, but that's always a perfect place to start, because they are in business and they are a community service at that level.
Well, thank you very much for coming today. Thanks for everybody who sent us questions and for everybody who filled out our survey. There were 355 of you. Thank you. The North Carolina Department of Insurance has brought a handout on preparing for a disaster, if you want to pick that up on your way out. And we at the association have a little handout so you can give us some feedback on this session that will help us as we move forward. Now, please thank the panelists, Dr. Osborne, Marcia Kelly, Angela Hatchell, Jerry Fry, and Bob Steiger. A link to this recorded session will be available later today on the baldheadassociation.com website. So after today, it's there for you. Thank you for coming. Enjoy the rest of the weekend.